SoFi is about to explode. SoFi are about to release their earnings. We examine the bullish case for SoFi in 2025 and why I think this is one of the biggest plays for the year. So a quick breakdown of this video. We'll be talking about the company and then quickly move on to talk about some of the key points. And then I'll be talking about some of the data, the metrics that we're seeing, when the earnings are, and then finally my strategy. So what is SoFi? Having originally started out providing student loans using novel data science, it's quickly turned into a one-stop shop for financial services. They provide a number of products to save, spend, invest, and borrow. And really, it is quite impressive the level of products that it provides, especially in comparison to the UK challenger banks that we've seen, like Monzo, Revolut. If we take, for example, even the Invest platform, it has all sorts of auto investing options, the ability to do puts and calls, which is quite rare. Even got the option to get a mortgage. I recommend looking at their website in order to see all the products they've got. But let's move on. Why do I think this is a big play? Well, the flip's just happened. The company has turned profitable in the last quarter, and really there is no reason why it won't stay profitable at this point. Revenue has year on year shown growth, but until recently they have had a negative income. One of the other key points is JP Morgan predicts that the stock price will go anywhere from $25 to $35 in 2025. SoFi is not just profitable, but they're also actually changing their model structure to actually provide investors with a little bit more confidence that this is not some loan-based app. One of the things that the institutional investors have suddenly realized is that this is not just a regular bank. This is a tech-first bank, and this is hugely important because millennials and Gen Zs, we're not used to going to banks. We don't really like going to branches all the time, and longer term this will be a lot better for their margins. You won't have to worry about setting up of branches. They can purely focus on making sure that the technology, that the user experience is as good as possible. And this is really clear in actually their member growth. And one of the key things that people miss when they're analyzing SoFi is that although they say, yes, millennials don't like to use physical banks and therefore this is a great idea, no, what they miss is that actually, because they started out in student loans, this is generally could be one of the first interactions with a bank this individual has had. And as they grow older, they will start using more and more of their products where they actually have disposable income. This could be in investing, in options, or whatever, even things like mortgages. And this is a really key point to understand, because I still have my HSBC account that I opened as a student, and I still use it, and it's still one of my main accounts. And it's once you get people in the door, then it's a lot easier to provide all these other products, and this is exactly what they're doing. It's such a great business model. So I really hope you understand this point really clearly. And one of the other things that I really like is that they have what seems to be really good management. The CEO is a well-respected CEO, having worked at Twitter, started off at Goldman Sachs, and was actually the CFO of the NFL for some period of time. So, the people that are controlling this company, it's in good hands. Now, I mentioned before that JP Morgan predicted, or does predict, a $25 to $35 in 2025. Why is that? Well, the CEO's compensation package is rather interesting once we start to take a look at it. He requires that the price is in that range in order for him to actually benefit from the shares that he's got. It's something like 90% of his package. It's incredible. This is the biggest incentive possible for a CEO to make sure that this stock price rises in 2026. That's not a long time. It rises to at least $26. More importantly, also, is that he gets even more if it hits the 35 target. So this is where they're coming from, and this just gives me even more confidence that they know what they're doing. Now let's look at the data. To put it quite lightly, they've just smashed everything. All their high guidance, they've completely smashed. Net income is 240 million, and that's compared to 2023, where they made a 300 million pound loss. But as I said, flip time. They're now in profit, so we can only expect that to continue for some period of time. Now, the quarterly adjusted net revenue is also up 30% from the previous quarter, and it's 689 million. That's quite something. And there's two other key stats that I think people should be aware of. Galileo, which is you could kind of see as their kind of tech platform, has 160 million accounts, and that's up 17%. So their background technology is even increasing. And let's look at their members. The members are 9.4 million, increase of 35% since the previous year. That's incredible. Their year-on-year growth from 2020 to 2022 has been in the mid-40s. There's not many companies that have 10 million users. The likes of Monzo that have been around for a very long time are nowhere even close to that. Now, of course, they're not in the US market, but HSBC, a traditional bank, only has 14.7 million customers in the UK, with a 39 million across the world. It's just incredible stats. So when are the earnings? Okay, so the next earnings is on the 27th of Jan, which is why this video is so critical. So what is my plan? Well, my advice to you is, if you're going to go in, you need to get in before the 27th of Jan. We're expecting these earnings to absolutely smash, but I suppose you need to really understand your risk profile if you're going to do that. I'm not betting on Farman here. There's still speculation in what I'm doing, so I'm not going all in. But every time I look at this company, all the indicators are telling me that this is going to be big, and I think, give it a couple of years, I might be regretting that I haven't put more money in now. But the key point here is that I am bullish on this company, and I do think that long term, stock could be a big hitter. So irrespective of whether it actually gets to $25 or $35 this year, I think 2026, I think that there's a very strong possibility because of the CEO package. There's also some other factors that I haven't really talked about. There's a lot of momentum going on at the moment, and that means if you even want to make a quick buck in 2025, I think this is a great stock to go with. They're a tech-first regulated company in what will be a Trump-based presidency. This can only be a good thing. Anyways, personally, I think obviously the longer term play is far better, and as a long-term investor, that's what I'll be doing. Okay, so that's one of my big plays for 2025. Let me know what you think. Do you agree with me? Is SoFi a big hitter for 2025, 2026? Or have I got it completely wrong? And if you found this video useful, please subscribe and like the channel. Until next time.